See, he's just not bothered by his Alibaba position because his allocation to Alibaba was nothing. And he's just thinking about the durability of his firm. Hello everyone, welcome to Just Invest Today. In today's video, we are going back in time to rehash my investment process when it comes to position sizing because Tom from the Investing Podcast did an amazing interview with Guy Spier, and there was an amazing question answered, and he kind of hit every target when it came to position sizing. So it got me to think a lot about what to do in the market, how I'm going to go forward when it comes to position sizing, because I still don't have all the answers and I'm always willing to learn new things. Guy Spier in this podcast with Tom did an amazing job of kind of breaking down his process, but it might not be the most efficient, but we're going to get into that because during my whole process when it comes to Alibaba, I have a cost basis around 185 around that, so I'm still down like 40%, 42% around that mark. And it just gets you to think that maybe I could have did it a smarter way instead of putting a 10% position right away. And then all of a sudden, you're like, boom, it gets lower, gets lower, it gets lower, it gets lower. And then you keep adding, you keep adding, you keep adding because you're like, what? It can never reach this price, and it does. Guy Spier breaks down his way of position sizing. So I want to hear from you guys what you think about this strategy. I might implement some of this into my strategy when I'm thinking about investing in companies. So let's get into this video.
Coming back to the question, never invest 50%. I do believe that in Horsehead, which was a company that went bankrupt, I had 10%. And subsequent to Horsehead, I would never invest at initial cost more than 5%.
That's what happens when you go through a negative event during your investment journey, is that you see what happens to your portfolio and then you're just like, damn, I'm never going to do that again. So he's learning from his mistake of investing too much up front because the pain of losing all that money, it was just too much for him. So now he wants to kind of go in it with a more open eye of a 5% bet in case the stock drops or in case the company goes bankrupt.
Of my fund into a position, and I consciously know that that is going to reduce my returns, and that's just fine because what I'm into is longevity. I'm into staying in the game and making sure I can stay in the game, and that requires me to manage my own psychology.
So what do you guys think about that? Having less gains when you're taking that 5% position at cost, or you actually investing 10 to 15% when you know you have a strong opportunity? What would you guys rather do? Because this is a question I have to think about when it comes to Alibaba too, because remember, I did make a mistake of just putting too much money up front, and then I had to keep investing in it, keep investing in it, and keep investing in it just to get a lower cost basis when it was dealing with its issues. So now I'm coming to think maybe I should start only putting like a 5% position into these companies at start and then kind of build out my case or build out my portfolio that way instead of putting a huge amount up front. Because if the stock tumbles again, especially in this stock market environment, you can put like a 5% position and then put another 2% and then another 2%. And if it gets extremely low, that's when you can kind of go deep and invest heavy in it, in my opinion.
But also to manage the psychology of my investors. And so that is a very comfortable place for me. And I would not do 10% again. And I've had a number of times now when I've invested in something that's gone down 50% and it hasn't bothered me in the slightest. And I just keep track of, I might add to it. But it is a very dangerous place when you've got...
And that's what's happening with Alibaba. It's down like 50, 60 plus percent. And it's not going to bother him because he only has like a 5% position in Alibaba. So when you think of it that way, he can kind of just sleep tight, sleep nice. But imagine you have a 20, 30% position in Alibaba. Are you able to sleep nice or sleep the same way knowing you're down that much? And it's different for everyone. Like if some people can deal with that psychology, that mindset of just knowing you have 20, 30% into a position and it's down that much, then you don't really need to adjust your strategy, especially when it's a strong company like Alibaba. But if you just can't handle it, you're just going to think about it. If you have other people's money invested in this firm, damn, like it's gonna be hard for you to like hold on tight because you're just gonna keep thinking about this damn position. So I kind of see both ways.
If I make something 5, 6, 7, 10% and it's declining, and then you want to add more, and suddenly you pour half your portfolio into one stock, and maybe your judgment was wrong. So, keeping that kind of mental balance and finding ways to keep your mental balance. And it's kind of a visual way of thinking about it, Tom, for me, that somehow works. I don't know why, is that when the position is kind of like up to 5%, kind of a 1% position I feel like is down below me in size. Then a 5% position is sort of coming up to my waist, so to speak. And then a 10% is above my head. And I don't want positions above my head. I want them kind of down there. When I put 1 or 2% of the portfolio into Alibaba and it goes down 50%, I'm just not bothered.
See, he's just not bothered by his Alibaba position because his allocation to Alibaba was nothing. And he's just thinking about the durability of his firm because he has all of his net worth, his family's net worth, his friends' net worth into this firm. He has to make sure that what he's doing, the best he's making, are going to last forever, going to last beyond him for his kids, for his children. So maybe this way is actually a better way if you're just thinking long-term progress.
And I know that I ought not to be bothered if I'd allocated 20% of my portfolio to it and it went down by 50%, but it would bother me. And so that's me managing my own psychology. If there's I think that if somebody's saying, oh, you're a scaredy cat and you don't have big balls and you're not swinging for the fences when you ought to swing for the fences, that's kind of a voice that one should probably ignore.
This just reminds me of Charlie Munger because Charlie Munger has such an opposite mindset and Warren Buffett because they realize a lot of the time not a lot of opportunities in the market to actually take these big swings at companies that are producing so much cash that are undervalued in the market because maybe the market just went through a crash or people are not seeing what the company can do in the future. Like, how many times are you going to find a company that's probably worth 200 selling at 50 or 40? And that's the chances that he takes when Charlie Munger bought the bank stocks during the crash, or when Warren Buffett's buying Washington Post. Like, how many opportunities are you going to find like that? Like, you don't get a lot of them. So when you find them, you have to take a big bite. Imagine Charlie Munger or Warren Buffett only put like a little 5% position in those. They wouldn't make as much money, or they wouldn't be doing the same. So when you kind of have to see opportunities, you have to take them. So that's why I'm kind of on the fence of both strategies. It's like 5%, you're going to take less risk, but you're going to be more permanent, more durable in case something happens with your company. But on the other hand, you can take these 10, 50% bets, taking these bets with big opportunities when something actually presents itself, like something like Alibaba or something like maybe Facebook or any company that goes through a huge drawdown where you still think there's a huge upside. So tell me, which side of the fence are you leaning on? Are you willing to take more of the 5% bet approach? Or are you willing to take more of the 10 to 15% bet approach when you see amazing opportunities in the market? Tell me what you think, man. Leave a comment down below. Like this video, subscribe to my channel, and I'll get back to you in the next video.